Hello, what's going on? Welcome to the Homefront, episode 51. Tonight I am going to talk to you guys, hold on real quick, let me adjust my chair, about home buying myths. So I will give you a few minutes to jump on the feed. Please be sure to let me know that you're on so I can say hello. Also, hit the like button, hit the love button, and share this out. Don't be selfish with the information. I want to get you guys good information on home buying myths. If you're new, if you're going to be buying a house or selling a house, real quick. What's up, Sham? Thanks for joining. John, Brittany, what's going on? So tonight we're going to talk about home buying myths. The first one, which I find very interesting, is a 30-year mortgage is always the best option. Not true. There are other options which may work better for you. This talks about when choosing between a 15 or a 30-year mortgage, a 30-year may not be your best option. You do get a lower interest rate sometimes with the 15-year mortgage. It says while loans are structured similarly, it all comes down to the length of the loan. Shorter term means your monthly payments will be higher than a 30-year term, but you pay less in interest. And obviously you're going to pay it off a lot quicker. So the tip is a 15-year mortgage isn't for everyone, and it's important to speak with your banker to determine what you can afford. Hi, Michael. Thank you for joining. What's going on, Chris? Tom, hello. How are you guys doing this evening? Just to give you a little bit of information on home buying myths. I come to you guys every evening with a little bit of real estate information, and hopefully it will bring you value and improve your home buying or selling experience. Myth number 2 is the lender with the lowest rate is always the best option. Not true. You may be dealing with a lender for a length of your loan term unless you refinance, sell, etc. So you want a company that you can easily reach out to and get a response from should questions or issues arise. Also, keep in mind that when you initially start the loan, you're not necessarily going to be with that lender for very long. A lot of times the loan officers that you deal with will write your loan and will initially start it, but then they'll sell it to another servicer. And servicers always bounce it around. That's just the way it works. So I would say at least during the period of time when you're getting your loan started, deal with a lender that's responsive. Deal with a lender that explains things to you and helps you understand. Don't always just go rate shopping because generally speaking, they're going to have similar rates. Myth number 3 is you need 20% down payment. Not true. Putting 20% down of your home's purchase price can lower your monthly mortgage and interest costs, but it's not your only option, and it's certainly not your only option now. There are many loans out there that are no money down or very low money down. There's the FHA loan that's 3.5% down. I think they do a 5% option as well. And then in Virginia, we have the VHDA loan, which is for Virginia purchases only, first-time home buyers. And they give you a grant towards the purchase of your home, which is really, really good. And as long as you stay in the home, I think for maybe 4 years. I am not a loan officer, so please don't take this as golden. This is just what I can remember. But if you do have questions on it, I can get you with a loan officer who can give you all the information. I think you have to stay there for 3 or 4 years, and then you're able to sell. There are restrictions that come with grant money, and then there's the USDA, which I believe is the first-time home buyer loan, and there's no money down. Similar terms on that one. But there are options. You don't have to just have 20% down anymore. That is not the only thing that you need at this point. It says the average down payment for Americans is actually 13.4%. I don't believe that to be the case either. It says, according to BMO Harris report, speak to your lender about options. Again, there are lots of options. If you would like to know a little bit more, I can connect you with a loan officer. What's up, Robert? Hey, Jason, how are you guys doing? Joe, Greg, Mike, Buddy, all you guys on tonight. Make sure you share this out. You never know who is on your friend list that may need this information. So don't be selfish with it. Myth number 4, if you've saved enough for a down payment, you're all set. That's totally false. There are other costs involved in the home purchase process. You need homeowners insurance, closing costs, which we've talked about. They mention in this article potentially hiring an attorney to review your associated contracts. Really don't need, I wouldn't say that you even need to do that, because we have standard contracts. Realtors have standard contracts that are written for that, and we will offer them to you. You do need money for an appraisal and an inspection. And then for obviously your mortgage payments for utilities, but you don't need that up front. I mean, well, that's all included in your closing costs, which is your initial costs, which can be factored in at least in the Virginia market, we can ask the seller to pay some of those. So you do need money for a down payment if you have one, your inspections, your appraisals, and potentially your closing costs. Closing costs, I usually estimate them at 3% of the sales price. And those are, again, I've explained those before. Those are your prepaids, your escrows, things that they want in advance. Sorry, I don't know what's going on. Things that they want in advance at closing. So typically, you'll pay your homeowner's insurance for 1 year in advance. That goes in. They'll take a part of it for a mortgage payment and transfer taxes, things like that, recording fees, standard fees that you're going to pay when you're closing. Hey, Shannon, thank you for joining, and thank you, DJ, for sharing. Myth number 5 is the seller will pay for pretty much everything at closing except your down payment. False. The seller does not pay for everything. There are some things that are negotiated, like the closing costs, and the seller will typically, the seller pays the realtor fees. But you do have inspections that you pay for. You can negotiate your pest inspection. And then the other one, pest inspection, there's another one. But the buyer always pays the home inspection fee and your appraisal fee. These are fees for you. So those are things that you pay. But typically we can negotiate closing costs and pest inspections and maybe some other things we can ask them to pay for. But with certain types of loans too, there's restrictions on how much they can give you. Number 6, you don't need a real estate agent. I would highly caution you, especially if you're a first-time home buyer, you need to use a real estate agent. You don't know what questions to ask. It's one of the biggest purchases you're ever going to make. And you need to have someone's expertise. We also have the contracts. You don't pay a commission as a buyer, so that shouldn't even be a concern. This article states that using one shouldn't cost you anything. Agent's commission comes out of the sale proceeds. And just to note, the seller has most likely factored that amount into the home price anyway, which is true. You can find information about available homes on a number of websites, but agents offer several advantages. Very true. Like I said, you don't know all the questions to ask. So that alone, you need to consult with the expert. And if you're just starting, obviously that's not you. This is a big purchase and you don't want to get taken advantage of. I have seen people for sale by owner that refuse to work with an agent. And I've consulted with them during that process, and I didn't get paid anything because I did not want them to get taken advantage of. I wanted to be able to help them in any way that I could. But it's just a precaution as a home buyer. You definitely need an agent. And I don't recommend that anyone take part in a transaction that you don't have expert advice from or consultation. Number 7, you can't buy a home without perfect credit. That is false. You don't need a 700 or higher. You can generally, I've actually seen one loan officer tell me that they take 580s. Generally it's 620, and that's not a perfect score. I mean that's going to have some dings along the way, but it's not perfect, and you can purchase after a foreclosure or bankruptcy. I think the waiting period is 3 years or 2 years with a hardship. Again, don't quote me, I'm not a loan officer, but that's just generally information that I've heard. So, we all have not a perfect past, or there are some people that have obviously immaculate credit. It's perfect. So just keep in mind you can purchase a home even if you don't have perfect credit. You just need to get you with a loan officer to find out what you can do. If you know you have some dings, it's easy to get you with someone and they can tell you, and I always do this. If you know that you've got some repairs to make on your credit, I just say, let's get you with the loan officer, have them run your application, and they'll give you advice. They'll tell you exactly what you need to pay. You don't need to pay off all your debt. You need to have some history. You need to be below 30%. That weighs heavily on your rating. But if you can get your debt below 30% and then just make payments every month without having any past dues for 30 days, I think a 12-month is for a VA loan. As long as you have clean history for 12 months, you're good to go. But those are just some tips, and debunk that you need perfect credit to buy a house myth. And renting is always cheaper, myth number 8. That is not true. Depending on the area that you live in, it could be cheaper to purchase. If you're getting a really good interest rate, it could be cheaper to purchase. I know here, personally, for my home, it's cheaper to get what I have with the mortgage than it would be to rent it. So it just depends on your area, depends on your interest rate, and there's a lot of variables, but consider home ownership. It says in the U.S. buying your first home with a fixed rate mortgage can help you avoid unexpected annual increases. Obviously, rent goes up every year. So you lock in your rate for, if you have a 30-year fixed loan, you'll lock in your rate for 30 years. And then if you ever decide to rent it out, you could be making money on your mortgage. So homeownership may also help you save. It does help you save at tax time. You get to deduct your mortgage interest. So all those things factored in, comes along with home ownership. You do have extra costs that you don't have when you're renting. You have maintenance costs and things like that, but overall it could end up being cheaper and a better buy for you. So I hope that information was helpful. Please, again, share it out, and thank you guys for taking the time to spend with me every evening. And if you have any topics that you would like me to review or get questions answered for you, please feel free to send me a private message. I'm on Snapchat, Twitter, Facebook, all the social mediums, and I really appreciate you guys spending time with me again. So I will see you tomorrow, and have a good evening.